Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's the weekend. Let's recap the action. Looking back, the bulls completely owned this week's close. The S&P 500 and the Nasdaq finished at fresh records, fueled by a strong Friday jobs report and another massive surge in chip stocks. But this wasn't a clean, all-market rally. The week was bullish, sure, but incredibly selective. AI and semis did almost all the heavy lifting, while inflation worries tied to oil and geopolitics never really went away. Continuing that story, the weekly charts still look incredibly constructive. The S&P closed just under 7,400, and the Nasdaq topped 26,200, both at record highs. The Dow? It finished near 49,600, showing a lot less upside power. On the weekly time frame, this was a bullish continuation, not technical damage. Key support held and buyers eagerly pressed into Friday's close. The catch? The breakout depended heavily on mega-cap tech and semiconductors, so the technical posture is strong, just not broadly balanced. From there, the money flow story becomes crystal clear. Over the last 5 days, investors rotated hard into a fence. We're talking semiconductors, AI infrastructure, and select high beta growth. Communication services chipped in too, just enough to broaden leadership. But underneath, the rally was way less healthy than the index headlines suggest. Defensives and non-leaders acted more like funding sources than destinations. In fact, most sectors were actually down on Friday, even as semis surged. So, this past week was all about concentrated conviction, not universal participation. Over the weekend, the bridge to next week is all about unresolved tension. The biggest developing story? Still the Middle East. Tensions tied to Iran could seriously impact crude oil and inflation expectations. Meanwhile, crypto is one of the few markets trading live right now. Bitcoin moves into Sunday night. They'll give us an early read on Monday's risk appetite, and the chatter from Friday hasn't gone away. Was this week's close a powerful breakout? Or just another narrow, chip-led push that crumbles if CPI comes in hot? Looking back at the week, AMD was an absolute powerhouse. Their results and forward guidance crushed expectations, reinforcing the idea that AI demand is way bigger than just a one-name story. Why does that matter? Because AMD helped validate the entire semiconductor bid this past week. Heading into the next open, traders are watching closely. Can AMD hold its post-earnings expansion? If it does, the entire chip complex keeps its leadership credibility. Of course, NVDA mattered this week. It remains the emotional center of the AI trade. Continued strength in NVIDIA helped keep the Nasdaq's record breakout totally believable and kept traders leaning into growth instead of fading it. This isn't just a stock anymore. It's a structural pillar. Heading into Monday, and then CPI on Tuesday, NVIDIA is one of your fastest tells. Is risk appetite still intact, or is it starting to crack? SMCI is critical right now. Think of it as an appetite gauge for AI infrastructure. This past week, its rebound signaled that traders are still willing to embrace aggressive growth, not just hide in the safety of the mega-caps. That makes it incredibly useful heading into the next open. If SMCI keeps catching bids, the market is clearly comfortable with high beta offense. But if it fades quickly, leadership is narrowing even further. For next week, OKLO is a massive event-driven watch. They report on Tuesday, May 12th, and they sit right at the center of the AI power and advanced nuclear build-out theme. Listen, this isn't just about one stock. Heading into the open, OKLO gives us a direct read-through. Do investors still want exposure to the power side of the AI trade, especially as the market keeps rewarding infrastructure stories far beyond just chips? GBTC makes the list because it gives us a rare weekend read on sentiment. Since Bitcoin trades 24/7, its moves shape the Monday gap psychology before equities even open. So, while GBTC wasn't last week's main leadership story, it matters right now. Heading into Monday's open, a strong crypto tape reinforces risk-on behavior. A sharp reversal? That raises serious questions about speculative appetite right before CPI. Heading into the next open, the setup is straightforward but incredibly high stakes. Monday kicks off the new week, then Tuesday, the main event. We get CPI and core CPI at 8:30 a.m. Eastern, plus a tentative Fed chair nomination vote. Wednesday brings PPI, Thursday adds retail sales and weekly jobless claims. Risk management is everything right now. Why? Because this week's close left the market at record highs, just as inflation data and oil sensitivity are becoming impossible to ignore. So, that's your weekend setup. Looking back, the bulls clearly won, but they did it with highly concentrated leadership, not broad strength. Over the weekend, keep your eyes on oil, geopolitics, and crypto. They'll definitely influence the tone before the opening bell. And once Monday arrives, the market is laser-focused on Tuesday's CPI. Get some rest. The breakout is real, but the next test is coming fast. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.